All right, welcome into Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy. Thank you very much for tuning us in, if that's what you're doing. If you've been with us all day, it's been a struggle. I know there's a lot of red on the screen, so it's hard to make you stay, but we're going to try to see what we can do for you here. How about corn? Let's take a look at corn and see where we're at when we bring up that corn table. We're off 6 cents pretty much across the board. We're down by, we're at 6.70 3/4 in that D's contract, which is basically on the lows. We're only about 3/4 of a cent off. At March, down 6.5 cents. To 6.75 1/4. If we move over to the soybeans, we've got something similar. Beans are down 9 1/4 cents in that NOV contract, making its way slowly but surely down to $14. I don't like seeing it, but 14.16 is last. We've got a 10.5 cent loss in Jan to 14.21 1/4. How about wheat? Let's see, the Chicago wheat. This will be Chicago wheat. We're down 13 3/4 cents in that D's contract. 8.66 3/4 is last, about 5 cents off the lows. We're 13 3/4 cents lower in the March right behind it to 8.80 even. All right, let's take a look at hardwood wheat in Kansas City, the old HRW down in KC. Deese is off 16 cents, 9.34 and that's what? That's close to the lows, about 1.25 off the lows. March is down 15 3/4 cents to 9.31 All right, moving right along, let's take a look at what we've got happening in spring wheat. That's down 12 cents. December, 9.37 3/4 is last, or 9.37 1/4 is last. That's 3 1/4 cents off the lows. And March is off 12 cents too to 9.42 3/4. All right, let's move over to see lastly what cotton's doing, and it was heavy too. 238 points lower in that D's contract to 90.16. That's real close to the lows of the day. So we're going to keep an eye on that one. But to make us all feel better, we've drafted in Todd Horwitz with Bubba Trading. He's out in Las Vegas. Todd, make us feel better, brother.
He ain't heavy. He's my brother, man.
There you go. There you go.
I don't think there's that. This is very slow, quiet action. If you go back and look at last week, we had all kinds of wild swings, but by the end of the week, we were back either up or unchanged on the week. I expect the same action. I don't see any reason that we're seeing some selling other than there's some wholesale selling. And of course, some of these economists are making these ridiculous statements, and I think too many people try to follow news that's already out of the barn, right? The horses ran down a mile and you're building a fence now. And I think these are some of the problems that occur. There's no reason that I don't think we're going higher. There's too many things that indicate that we should see much higher prices by the end of the year.
Well, we got to have these folks wake up a little bit here. I mean, they've been on this rampage of raising rates. That dollar's hurt a lot of folks around the globe. What's wrong with maybe taking a little bit of a second here or two to see how these things are going through, especially with quantitative tightening happening as well. So there's a lot out there that we need to be concerned about, and it all is pointing to things slowing down, wouldn't you say?
Yeah, I think things are going to slow down, but one thing that doesn't slow down is the amount of food that you consume or you're eating. I mean, we still eat every day. We still got to fill our cars, and those things are things that don't slow. So yes, the equity markets should probably see some pain and slow, but when it comes to your diet, you're still going to eat. You're still going to make food. You're still going to feed your family. And, we don't have enough food. This is going to be a much bigger problem, which we never seem to get around to, except for you and I talking here, is that, this is going to be a problem. And there already is food riots throughout the country, throughout the world of shortages. And we have not begun yet. We're not even through harvest yet. What's going to happen then?
I think it's a great example about something you and I talk about, too, that, we've got a tightness in oil. We've got a tightness in energy. Look what's happening in Europe. But even though we see what's happening in Europe, and even though we see what's been happening around the world, you sometimes get these, downwashes and the things that are already tight. The supplies are tight. The pipelines are tight. And I think that, it's a good idea to bring them up because I think that gives folks an opportunity, right?
I agree. I think it's a great opportunity to look for a good opportunity here to buy. And I think that, remember, at the end of the day, it does come down to supply versus demand. And if we're going to be short supply, we're going to have a much bigger demand, which is going to drive prices higher. And a lot of the things we're seeing now could be in front of the election and a whole bunch of things that are going on that we have no knowledge of at this moment. But, oil has no business dropping where it's dropping to. Again, I'm happy for everybody. It makes it cheaper. But we all know that the oil issue has not been solved.
Right. All right. Great stuff. Stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Todd Horowitz with Bubba Trading in Las Vegas after this. All right, welcome back to Market Day Report. You know, just talking to the guests, this is a great example of why you have to kind of have your toes in everything, or at least have a little bit of an idea about what's been happening out there, because our markets are getting yanked around by things that would normally move commodities. So we got to make sure we're abreast of all that stuff, both geopolitical and here, and everything that's happening around us is really going to be affecting our prices. Let's take a look at live cattle. We'll bring up that real quick. That's a little easier here today. We've got December off 95 cents to 147.60. Feb's off 77 cents to 151.92. Let's see feeders. Feeders benefiting from a lower corn board? Nope. Again, this is just telling us that folks are worried. They don't want to own anything. 95 cents lower knock to 177.40. 85 cents lower Nove to 177.40. How about that? And then finally, let's take a look at lean hogs. We'll get back to our guest analyst. Lean hogs are really the leader on the downside today. We got October off $1.95 to 90.67. But we do have Dees off $2.80 now to 80 even, 15 cents off the low. So let's bring in Todd Horowitz. Todd, we got 60 seconds. What are your thoughts here?
Well, I think that cattle's doing what we thought it would do. It's holding pretty strong and near the highs. Based on oil is going much lower. And of course, hogs are now suffering. After oil was running, hogs were trying to rally a little bit. And I think that it's just a switch from one protein to the other, goes back to eating and food consumption. And if we can afford better, we're going to get steak, which people consider to be better, and hogs will be second. Now, we're seeing oil come down dramatically, a big reversal today. So listen, at the end of the day, I don't think they're going down a lot. I just don't think they're going much higher than we're there.
And I think that you're not wrong in your assumption that we need to see things settle down so we get back to trading a commodity story, right? Right now we're trying to manage our books and manage our marketing plans with everything around us story, and that just makes it a lot harder. I think that's exactly what you're trying to say. I really appreciate you coming on. Thanks a lot, Todd Horowitz with Bubba Trading in Las Vegas. I'm going to bring it back here to Nashville, so we're going to throw it over to Janet one more time.
All right, as always. Thank you, gentlemen.